Welcome back to the Investing Advantage podcast. Today, I've got Joe Mendoza with me. He's a real estate investor, licensed broker. He was a certified fund manager. Actually, I was on Joe's podcast probably 6 months ago, maybe more. I'm not entirely sure. We had such a great conversation that I wanted to have Joe on the Investing Advantage. And he's actually out of San Diego. But I think what you'll find is the people that I bring on the show, there's a few things that they all have in common, and that is they've got a lot of real estate experience, investing specifically, and I find that they are transparent, honest, and when Joe and I had the conversation, it was just a very kind of real, like no games being played. It was just a really authentic conversation. So I'm really excited to have Joe on today. So Joe, welcome, and maybe just for some context, because you've got over 30 years experience, like how did you get into the world of real estate and then real estate investing?
Awesome. Well, thank you so much, Shane, for having me on your show. I'm super excited to be here, and man, 30 years goes by pretty darn quick. I actually started exploring real estate about 17, 18 years old when I was in high school. My dad was first generation immigrant from the Philippines, and he just was like, "Hey, Joe, you got to be rich. You got to be rich." And I was like, "How do I get rich?" So one of my uncles randomly said, "Hey, Joe, I've got a couple tickets. You might want to check out this real estate investment seminar." Here I was still in high school, and I checked it out, and it was Robert Allen. And it was a live event, and I met him. I got so fired up, and the rest was history. So that's what really started it.
Interesting. And so you started off down the path of real estate investor and then transitioned into brokerage and all the rest of it. Was that your path, so to speak?
Actually, a little bit opposite.
Okay.
So as a 17-year-old child,
Yeah.
I was like, man, how can I get in this business and have some kind of credibility?
Yeah.
So what I started doing was at night, I would go to college while in high school, and I started taking all these real estate courses,
Yeah.
real estate principles, real estate practice, real estate appraisal,
Yes.
and got in position to get my license. And then unfortunately, during that time in the early 90s, the market just crashed. And so I said, okay, you know what? I'm going to take a break. I'll put this in the back burner. I'll go finish up at San Diego State. And then I started getting into stocks and insurance and all that stuff. And then I wasn't too excited about it. And I started to re-explore real estate. And it was about mid 90s, early 2000s when I became an official broker.
Yeah.
And I made a run as an agent, and I just caught it right. I mean, the market appreciated like almost, it was crazy. If you were here in the 90s, I mean, we saw properties appreciating like 10,000 a month.
Yeah.
And you would make money within a year, like 100,000 or more. It was nuts. And then I started using some of my commissions to get into investing.
Yeah.
I started doing fix and flips. I started doing syndications. I started doing some land development. I just went crazy. I mean, I literally, how I started the investing was I pulled out 113,000 equity from one of my homes,
Mm-hmm.
and I parlayed it into multiple, like fix and flips, syndications, multifamily, as I mentioned, and then turned that 113,000, Shane, into over $1 million in less than 2 years, and just started stockpiling and building it, and it went crazy from there.
And so how long ago was this then? Just for
It was so I got my real estate broker license in 1998, and I
okay.
still have it today. And then when I pulled out the cash was in 2001.
Okay.
And then, yeah, shortly after became a millionaire.
Yeah.
And it went crazy from there.
And so what type of deals are you doing today? Is it more on the commercial side? Is it still on residential? Do you have a
I
combination of
still,
both?
yeah, Shane, I actually still do both because I like diversification. And what Robert Allen taught me long ago was multiple streams of income. That was one of his books. And so that really stuck with me, where never put all your eggs in one basket, because
Right.
unfortunately, when 2008, everybody knows that story. I was so laser focused on real estate that I had my slice of humble pie like everybody else. And so after resetting the clock, after restacking the chips, I had to regroup and I built it back up.
Yeah.
Because those chips get knocked down when you go full tilt like poker, you know, you got to start back over, you know? And so I did. And then luckily, you know, with the grace of God as well, that things started happening again and I started diversifying again. So that's where I'm at today is I do single family, I do some multifamily, I do some REITs, some passive income. I'm also invested in some stocks as well. And I got a pretty diversified portfolio.
You know, that is one thing that it's nice to hear, Joe, because one of the things that I focus a lot on commercial real estate, but I'm very aware that people can make very good money investing in residential, right? It's more active, and typically the deal size is a bit smaller, but you can still make money there. A lot of the investors that I work with, they are going to be in the market, right? When you've got 10, 20, $50 million net worth, or even $1 million net worth, you're going to have money in multiple areas, right? You're not going to have it all in real estate, for example. So I'm happy to hear that, because I think sometimes I'll listen to real estate investors that are so like they have the blinders on, where like everything else is wrong and this is the only way. And when I hear that, I just think to myself, you know, that may be a little self-serving, if you will, in terms of being a little more holistic in your approach. So specifically on the type of deals that you're doing today in such a competitive market, this is a question I get asked all the time, and I'm really curious to hear what you're doing, especially in California with such a high amount of competition. And that is, how are you finding deals? How are you either attracting or proactively finding opportunities in such a tight market?
I love it. I love that question, Shane. First off, I would say mindset, because that's one thing. If you don't have the mindset that there are deals out there, there are opportunities out there, you've already lost, because it starts right there. The 6 inches between your ears, you got to have the mindset that, hey, there's somebody going to potentially be dying. There's somebody going to relocate. There's going to be a job transfer. There's going to be a divorce. There's going to be probate. There's going to be tax problems, et cetera, et cetera, et cetera. So it's the mindset. Then secondly, more tactical, fundamental is I'm saying to a lot of my coaching clients is look for absentees, people out of state. If you got a landlord who's out of state, chances are they're not paying attention to their property locally where you're at.
Yeah.
So mailers, and specifically handwritten letters, those are really, really working for a lot of my coaching clients and myself, where you take a simple white envelope, you buy at Costco, Office Depot, Staples, and then you write in blue ink to the person, the owner, and put a sticky self-addressed strip, a stamp, right? And make it a little crooked. You don't have to do it perfect, because when you make these things too perfect, I'll tell you what, they're going to think, okay, this is a business, etc. My daughter, check this out, Shane. Okay. So like when COVID hit early, she was getting bored. I go, hey, you know what, honey, I have a client that is doing a 1031 exchange. You know, they're getting out of one property, getting into another one. And I said, hey, you know what? We can't seem to find property in this one complex. And so helping out my investor client, I said, hey, I need you to send these letters to this particular complex. It was about close to 200, 300 homes. So Shane, check this out. We spent about $300 US.
Yeah.
Okay. A person replied to that letter and said, hey, Joe, come on over. I do want to sell my house.
Yeah.
Okay. So I listed a property. I sold it. She ends up buying another property on the up leg, right? And that person, the first sale was about $15,000. The second sale was another like $25,000. So out of that $300 mailer, do the math, I did pretty good.
And so are you pulling tax records to find out who the owner, the name of the owner and whatnot, or are you mailing just the address of the homes because you know that they're in a certain complex?
Yeah, so depending where you're at.
Yeah.
So like whether you're in Canada, US, there's actually software or title companies or tax records. If you're a realtor, go on MLS. That's a lot harder. So
Yeah.
like software like PropStream
Mm.
or Deal Machine, or here in California, there's Rebo Gateway. There's a lot of different tools you could use, or
Yeah.
subscriptions, to get these very, very focused, what I call low hanging fruit.
Yeah. Yeah. And what would you write? Like, just like, we'll be a little tactical. Usually I stay high level, but I'm curious, like, what would you say in that letter?
Oh, I keep it simple.
Yeah.
I'm a very KISS kind of guy.
Yeah. Yeah.
So I keep it simple,
Sure.
silly versus the other word.
Yeah.
And it's like, dear homeowner, I have a buyer who's looking for a property in your particular complex.
Yeah.
If you have any thoughts of selling, please call. Or you could be direct, like, I am an investor. I am looking for property specifically in your area,
Yeah.
and this fits my criteria. If you have any interest in selling, please call me. What I usually put is my toll-free number,
Yeah.
and it's also an answering service. So I like to filter it out,
Yeah.
and I don't like, time wasters, tire kickers. I have a team that does all that for me.
And would you also have a website on there? Like, because this is something that it's interesting. The reason I'm asking this is because before we started recording, I mentioned that I've got 2 offers out right now to buy basically homes, but I'm tearing down the homes and building up because I'm going to rezone them. And I have 2 specific locations that I really want to focus in on. And that's exactly one of the strategies I'm pursuing, is the direct mail.
Perfect.
And what I've considered, and I'm interested, is, would you have a website on there, that, like, a URL that they could go to, and you could almost pre-screen them a little bit, or like, explain to them, here's what it is that I'm looking for, here's what, the type of properties. Would you give them that type of information, or do you really just want the phone call?
So great question, Shane. So there's 2 schools of thought, right? So depending on the target market that you're going after,
Yeah.
if you're looking for multifamily, commercial, some of the bigger properties, you kind of got to look at demographics.
Yeah.
So usually I like, demographically speaking, those would maybe be the baby boomers.
Yeah.
Baby boomers typically aren't that technologically savvy.
Good point.
So I like the phone number.
Yeah.
There's other instances where I would use like a landing page if it was like a Facebook ad, a Google ad, something like that. But on a letter, I do like the phone number. And again, KISS, because if you make it too busy, I mean, my letter was so simple. I've seen other letters, some people even soliciting me, where it's way, way, way too busy. If you have a website and a menu of options and other tips, I mean, it gets too busy. And Shane, what I say to a lot of my coaching clients is, a confused mind does what? Nothing, right? So if there's too much on there, chances are they won't reply. It goes circular file right into the garbage can.
Yep. Yep. Yeah. That's such a good point. And so, is this one of your primary strategies? Because you also mentioned Facebook or Google. Are you leveraging technology as well? And this is one thing I'm very interested in, and that is, would you use Facebook or Google or YouTube to go after commercial owners to buy their properties direct? Because I've seen it in the residential side, but I haven't seen it in the commercial side. But I think it could work. I'm just curious if you have any experience in that.
Yeah. So that's actually something I'm working on as well. Facebook, I have tried and spent thousands and thousands of dollars. Okay. Unfortunately, it's hard to keep up with them because they keep changing the algorithms.
Yeah.
YouTube, I would say, totally different company, right? And so YouTube, I am experimenting. I do like it. I am getting some traction. I would definitely pay attention to that one.
Mm-hmm.
YouTube ads, some of these ads that you see right before videos, I would really explore that one. Google ads, absolutely. So out of the 3, I would say 2 out of the 3 I am working on. I am doing some things actively, and I am sharing that with my coaching clients. Facebook, I'm very gun shy. I mean, I've lost thousands of dollars, and they're constantly changing the algorithms there, and it's very, very hard to keep up with that one.
Yeah, I find Facebook to be more of a broad market, right? In terms of like, for example, finding real estate investors that want coaching, that might be, an avenue to go down. It seems that there's more people doing that. But if you're sniper targeting, maybe we'll have to collaborate at some point because I'm actually working with some people on the YouTube and Google myself because it's one of the biggest challenges, right? I mean, there's really, I call it kind of like a three-legged stool when you're investing in commercial real estate, and it could be the same for residential. And it's finding deals, financing them, getting the debt and equity, and then fixing them and optimizing them, right? I mean, it's not that complex, but the nuances of how do you find the deals, and then maybe we can transition now into how do you finance, how do you raise capital for them? And I'm interested because it sounds like you've got a lot of experience in that, and I'd like to like what would you do today, or what, like, maybe I'll start with what has changed from when you started raising capital to where the world is today. Excuse me, and then we'll talk about what you're doing or what you would do today to position yourself to be able to attract and raise capital.
Yeah. So what has changed?
Yes.
Definitely technology, right?
Yep.
There's lots and lots of ways to really get your message out.
Mm-hmm.
So that's the advantage. The disadvantage is using that as a handicap or a crutch, because I still believe, even my friends and some of my mentors still believe that, hey, belly to belly, you could build some of the best funnels out there. You could build some of the best landing pages, whatever, you start doing these thumbnails on your YouTube and all this clickbait, but at the end of the day, you have to talk to somebody.
That's right.
So that has not changed. So some of the things that I do is build rapport, build the relationship, keep it simple again. Because a lot of the times, I've seen these YouTube ads, these landing pages, they look very, very, very good.
Yes.
But at the end of the day, when you get face to face with somebody, if you don't know how to sell, you don't know how to ask questions, you're in trouble. So that's why it takes like a great coach, a mentor, somebody who's got a few cuts and bruises from some, different experiences, kind of guiding you through the process on what to say, what to ask, how to bring value to this person. Because if you're not bringing any value, they're not going to invest with you. And if you're not listening to their needs, they're not going to invest with you. So for me, it's really the strength on listening, strength on asking the right questions. That has not changed. So I am carefully listening, and I am carefully wanting to add value, because a lot of the times I could probably speak to the audience. If it's all about you, commission breath, hey, what am I going to make as my cut? And you're not thinking about your actual investor, putting them first, that's a big problem and could bite you in the rear in the end.
It's so interesting, that last point, because whenever I'm raising capital, I generally, all of my financial projections, everything is focused on what is my investor going to earn, right? And I know I've been in meetings where they will ask me, so what are you earning, right? Like, what is it that you're getting paid? And I usually, I know what the syndication fee is because that's got to be baked in, but I usually don't even take the time to say, yeah, like, what does this look like 5 or 10 years out when this thing performs? Because I'm so fixated on, I know that I'll do well if my investors do well, right? Like because that's how the deal is structured. It's structured in such a way that 80% of my upside is predicated on the success of the deal, right? If it's not successful, then I shouldn't win, just because I found the opportunity, if you will. So I'm really happy to hear that. So how would you go out today, knowing what you know, because you've been around, and who would you go after first?
Automatically friends and family.
Yeah.
So like raising capital, they already know you, they like you, they trust you. Okay. And so they're willing to hand over their money because of those facts, and they trust you. So it'll be in your best interest to really screen out those deals, make sure there's enough meat on the bone, because if you're not doing your analytics, you're not mitigating their risk. You're not stress testing where like, hey, instead of building a 5% vacancy, do a 15% vacancy. Instead of doing like a debt service coverage ratio at 1.25, 1.3, bake it in at 1.8 or 2. You got to really be way, way more conservative on those numbers. So yeah, friends and family first. Then if that's kind of tapped out, ask who do they know that might be interested. But you got to make sure you build that rapport. You also screen out that investor, because like, I don't like the low buy-ins. If somebody could commit to like 25,000, 50,000, that makes me a little nervous sometimes. So I usually start way higher at like, hey, usually if I find a deal, are you liquid 200, 100 to 200,000, and I'll probably just ask for 50, because if I know that they're okay with 100 to 200, 50 is a blink into the eye. So you always want to, like, if you're going too low on raising capital, 25 to 50, man, that might be their last money. And guess what? They're going to be bugging you every single day. Hey, what's going on with my investment? Where are you at? Et cetera, et cetera. And that's kind of scary too, where like I would stay away from that, not in a mean way, but in more a respectful way. Because if that's their last money, don't let them gamble. Don't let them do something like that with you. It's not worth it.
I am so happy to hear you say that. It's one of the first things that I tell anybody I'm working with that's out raising capital, and they'll put in there, 50,000 or 25,000 as a minimum. And I say, like, exactly that. This is not about being mean or excluding people out of your deal. It's just being mindful of the fact that this thing might be 5 years long. And if you have not raised capital before, you don't appreciate that person might be thinking that this deal is going to go exactly as your pro forma said. And let's face it, we're in, real estate is cyclical, which means it goes up and it goes down. And sometimes it does very well, and other times it doesn't perform as well. And that person that put in their last 25 grand is banking on, in most cases, they're thinking, oh, these projections are conservative. Like they're thinking it's a lotto ticket, right? Not always, but it's a mindset of someone that has, to your point, 100, 200, 500, $1 million. They can be patient, right? They're going to work with you. They're paying attention. They're not just going to give you money, without really looking at the deal closely. But I like that a lot. So I can just picture someone saying, okay, well, I don't have a lot of friends and family that have money. They don't know anybody that has money. So now I've got to go to people that I don't know, or people that maybe don't know me. Where would you start in that situation? Or would you even suggest going after people that maybe don't know you? And what would that process look like?
So I've been to, like, pre-COVID, a lot of these real estate investment events.
Yeah.
Right. And you get out there, you start shaking hands and meeting people, and again, it starts with the listening.
Yeah.
It's not about me. You got to hear them out.
Yes.
And approach them with some simple practical tactics. I would say is like the forward or the form conversation. Like family, occupation, recreation, dream, or message, right? Yeah. You start with those to kind of build rapport, see where they're at, see if you even like them. Yeah. Because if you don't like them from the beginning, you're not going to like them during the investment. So trust me on that one. Okay, so you got to like them as well. Okay. Yeah. And then what I would do is, like, when you start talking the money, is like find out D for dream. Are there any dreams you're looking for or looking to pursue or do, etc.? There's got to be some kind of need. So you're looking for some kind of need. And when you ask about, you could be very, very direct and like, what kind of things are you currently investing in? Be direct. Oh, I got money tied up in an IRA. I got money tied up in the stocks. How's it going? Mm-hmm. Keep asking questions. Oh, it's going great. No, it's doing terrible. Well, if you hear a pain point, well, bing, 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 there you go. Start digging a little bit deeper. I wouldn't ask for the money up front, because I would like have a couple more meetings after that and see if you're a fit, see what their risk tolerance is.
Yeah.
Because if you don't know their risk tolerance, that's another thing you gotta like pay attention to. Because if they're ultra conservative and you're telling them about this project and it's very, very high risk, high reward, but it's a long haul, like you mentioned, Shane, maybe a 7 to 10 year, where you got to park your money. Well, they might not be that type of person for you. So you got to listen for risk tolerance. Are they willing to go the distance? Because if they're not, they're looking just for a short turnaround. Maybe it's a quick, like a private lending deal on a fix and flip. So I would be listening for like, hey, what are the different things I'm pursuing? Is it a fix and flip? It's a buy and hold. If it's a fix and flip, I got this investor, they're short term. Okay, 50,000 they're okay with, less than a year turnaround time. Okay, I'm going to start categorizing A, B, C list. A is my fix and flip. B is my buy and hold. C is both, all of the above. So you want to really start organizing your list too. So when you start talking to people out there, get organized, have a script, memorize your script, and then start really organizing your database. And then again, fortune is made in the follow-up. You probably heard this before. So make sure after you meet with them, follow up with an email, a text, a thank you card. Man, it was such a pleasure to meet you, blah, blah, blah. Because you're starting to build that rapport. If you're not building that rapport, you're losing out on some potential capital that you could use on your next deal. Because, they never say there's a shortage of money. They say usually there's a shortage of deal. But I tend to disagree sometimes. In a market that we're in, man, you gotta like work both angles.
Agreed. And this is, I hope anybody that's listening or watching this after is really kind of picking up. And so I'm trying to push where I know a lot of questions that come into me, right? People want the one tactic, the trick, the hack, the secret. But the reality is none of these are secrets. These are, this is what people are doing to raise capital today, right? And it's not a one-time event. It's a process, right? I think that you can hear that in the way that, and that's why none of this was scripted. It's just the reality of when you're raising capital, it is a process, right? And it's not the first time you meet someone. It's following up. It's asking questions. It's being really interested in what it is that they're after. And to your point, like, you can't automate a relationship, right? There's a gentleman I work with, and I can't remember exactly. His tagline is relationships over algorithms, right? And it's this concept that you're building relationships. And I think, and this is just me personally, but I think a lot of people that are trying to raise capital think that they need 100 or 1,000 people. And I can tell you that one of the things that I've been hypersensitive about is, like, I'm happy with like 25 to 50 investors that come into my deals, because the reality is they refer others. I mean, if you have 10 good people that trust you and they refer one person each, I mean, you don't need to do too many deals and do well by them for them to bring in their friends and family, other people that have capital. And so it starts small. I mean, you like, I don't know if you read my book, but you started off friends and family, the people that they know, right? And it's these concentric circles, right? Starting close and then going out. So it's just really interesting that the same way that you're raising capital, the way that you've done it in the past, the way you're teaching your clients as well is, I mean, I hope you're hearing these are the secrets, so to speak, right? It's doing the work.
Success leaves clues, right?
That's right.
Success leaves clues.
Yeah. So one of the things that I'd like to get your perspective on, Joe, and that is, if someone is new to investing in commercial real estate or multifamily properties, what advice would you give them if they're just getting started?
Learn before you earn. Learn before you earn. You really got to study, whether it's via the books, whether it's via the podcasts, the YouTubes, the boot camps, a mentor, a coach. You got to learn before you earn. You want to really like understand some of the basics, some of the buzzwords, some of the different nuances on marketing,
Yes.
selling yourself, you know, asking questions, etc. I would start there. And then, don't try to perfect it. Get out there and start falling on your face. Because if you don't get out there and make the mistakes, you're never going to get off the ground, because sometimes people have too much paralysis by analysis, where they're wanting to study so much, get the ducks all in order, and never taking action. You're going to have to make mistakes, and it's okay to make mistakes. What's going to help you mitigate mistakes is, obviously, working with somebody like Shane or myself, who's actually done some deals, that knows what to expect. That will help you expedite and get to success faster.
Yeah. Well, and on that, I think it's first of all, I agree. Like you really do need to understand what I call the game of investing in real estate. And the game of commercial versus residential, there's some similarities, but there's quite a few differences too, right? I mean, just the players, right? The commercial brokers, the mortgage brokers, they're very different. And I think a new person coming in can sometimes be caught off guard, right? When you phone most residential agents, because here in Calgary, there's about 5,500, 6,000, right? They're typically pretty happy to hear from a person, right? Because they're competing. But in commercial, there's like 5 people and really 2 that control the market, right? In most of the asset classes that are here. And so when you contact them, like the game is flipped. They're saying, what have you bought? Are you ready? Do you know what I mean? And if you come across like maybe this is the first time you've ever done it, it can be the last time you get a phone call with that individual, unfortunately, right? And this isn't to scare people. It's just to be, to go in with your eyes open. And I think the other part that I really like there, Joe, is like, I don't know about you, but every deal I've ever done, it's different than the last one. There's mistakes, but you have to navigate that, right? And even with my mentors, right? I have people that I rely on and say, hey, this is a situation that's come up. How would you handle it? How would you do it? Right? Not always, but I have those people in my corner, which is always nice, because sometimes when you're in the deal and too close to it, it's hard to have perspective, right? And I think that's where, whether it's a coach, a mentor, just someone that has been through the process, can give you those insights. So I like that. I'm trying to think where I want to take this. What have I not asked you that you think would be valuable to share with the listener today, Joe?
Well, I would say I do wear many hats.
Yeah.
And I did mention multiple streams of income. I would just say to the audience, whoever is listening, whether you're an agent, an investor, a broker, commercial broker, et cetera, you know what? Just keep putting yourself out there, keep sending out great vibes. And I'll tell you what, you're going to be able to serve a lot more people. It's one of these things where, like, yeah, it's kind of scary to some degree, but I'll tell you what, that's when you got to learn how to pivot. I've been in this business, as I mentioned, almost 30 years.
Yes.
Did I have to pivot? Many times. I mean, I went from traditional sales, traditional fix and flips, to short sales, to REOs, to buy and holds. You got to learn these different things when the market shifts, and it will continue to shift, but you got to shift right there with it. Because if you don't, I mean, chances are you won't be in the business that long. Keep continuing to learn, keep continuing to study from other people, and stay humble. Stay humble in the process, because I could tell, like, I'm guilty. I mean, when I started real estate, I started making this money I wasn't used to.
Yes.
I got a little cocky, and I could tell some of the people out there are getting a little cocky, and so, like, stay humble is what I would request from the audience. Stay humble, stay hungry.
So I want to piggyback off something there, and I think that this is I really want to highlight it because I think someone might have heard it, but then not really appreciated it. And that is, there are multiple strategies on investing in real estate, whether it's residential or commercial. And because markets are always in flux, what worked 12, 18, 2 years, 3 years ago, that may not be the strategy today, right? And so I think having like a clear outcome is important, right? I want to earn $10,000 a month in passive income, 20,000. I want to replace my income. Okay, that's the target. But the vehicle that gets you there, it may be different because I like in my own experience, going after multifamily value add deals, like that is the flavor of the month. It has been for the past couple of years. And so it's not to say that it can't work. It's just that understand that there's a ton of competition. And so with more demand than supply, it just compresses cap rates and drives prices up. And so, yes, there are still opportunities out there. But I've pivoted my own business model a little bit, right? In terms of saying, okay, where is it that my skill sets are unique? And where is there a gap in the marketplace that I can exploit and take advantage of? Not in a negative way, but it's like, where is it that there's less, more of a blue ocean than a red ocean, if you will? What are you seeing in your market that you see as an opportunity or a gap where there's unmet demand, I guess is the best way to put it?
That's a great question, Shane. And I'd like to address something that one of my coaching clients and I talked about this morning.
Yeah.
So do the thing that others are unwilling to do. Do the thing that others are unwilling to do, meaning there's a scarcity of listings. There's a scarcity of deals.
Yeah.
Pick up the phone, make some cold calls, door knock. I took on a new agent on my team recently.
Yeah.
He came from another company and he was there for, I don't know, 6 months, almost a year, 0 deals. I just taught him how to do his scripts. I taught him how to what to say during door knocking. First 2 months, 2 listings, 2 sales. What was it different? Well, I'll say number one, I'd have to take some credit, but I'll tell you what, like I said, right in the beginning is do the things others are unwilling to do. You must.
And that in commercial real estate, right? This is something that I was talking, it's so interesting. Like the parallels are very similar. And so I was showing a lot of my clients, I said, look, I just subscribed to CoStar. Now CoStar is not inexpensive for market data. And I went through and I said, here is how you can research your market. Now, is it some people look at that and say, geez, I don't know if I want to spend 5, 10, whatever $1,000 a year to get access to all that data, right? I just want to buy my first property. And the way I framed it is I said, look, wholesalers will spend $250, $500, $1,000 just for an internet lead, right? That doesn't even mean that that person is going to convert into a sale. And so they'll spend $5,000 a month in hopes of getting 1 or 2 deals or whatever it happens to be, because, I networked a lot with a lot of real estate investors. And so some people might say, well, that's way too much. But I've talked to enough people that I think that those are reasonable. And yet when they get to commercial, it's like no one wants to spend any money. No one wants to do the hard things. To your point, they won't pick up the phone and call someone direct and say, hey, I'm interested in your property at 123 Main Street. I'm an investor. Would you be open to having a meeting? Would you be open to selling? Right? And the difference in commercial real estate is that people buy them for investment purposes, right? So if they can make money, they're going to take that call. It's not in my experience, it's never been that uncomfortable, right? Because it's you're giving them what they want. But I love that. What are the things beyond phone calls or door knocking? Are there anything else in your experience that you've seen that has worked well because very few people are willing to do it? The podcast would be one, right?
Yeah. So yeah, for sure. Podcasts, the YouTube, I'm glad we're starting to open up events, host events, host masterminds, do some of these big pay it forward type of things where you're adding value to the community, whether it's a room full of brokers, a room full of investors, a room full of potential sellers. You know, those are different things where you're actually hosting, whether a webinar or a live event. Some people aren't willing to do those kind of things. You know, there's a lot of different things that a lot of my coaching clients are, you know, thinking out of the box, or I'll help them think out of the box. Those are the things, you know, you've seen them. You know, what I would say to the audience, if you feel kind of scared or nervous, do that thing.
Yeah.
That's the thing,
That's good.
you know, and that's the one you got to pursue.
I like that. I like that a lot. I hadn't even thought about it, but of doing an event where you have, say, some brokers come in, right? Or, but this is a relationship business, and the reality is, relationships aren't built on a phone call or one coffee, right? And so if you can do things, I mean, I was recently invited out to go cat skiing for 3 days, and I mean, these are like smart people, right? They're investing first because they know down the road that they don't know for sure, right? There's no guarantees, but the goodwill that's built and that relationship that you build with someone over multiple meals, having lots of fun, getting outside the office. I mean, you don't have to talk shop the whole time, right? It can be very much getting to know about their family. And so I really appreciate that. Joe, where can people find out more about you, the coaching that you offer? Who is it that you help that in your would be a really good fit, I guess, because that's I think the other important aspect of finding a mentor, if you will, is making sure that that person has similar values, principles, that they can help you achieve what it is that you're after.
Yeah, the best way is to go to either one of my websites, joemendoza.com. I'm giving a lot of different free tips there. If you don't want to learn more about me, go to joemendozateam.com, TEAM, and that's the best way to go get a hold of me as well.
Perfect. Well, Joe, I really enjoyed this conversation. Hopefully anybody that's listening, you're able to get 1 or 2 key insights. I mean, I've got well over 3 pages of notes. So, I mean, if I took away some real nuggets here, I expect that the audience, if you're listening, you got some as well. So thanks,
Thank you
Joe.
so much, Shane, for having me on your show. I really appreciate it.
You bet. Take care.
You too.